Hey folks, welcome to Ordinary Investor. Today we're scanning Innoviz Technologies, ticker INVZ, the LiDAR sensor innovator for self-driving cars. Shares at a 186, could it rocket to $1,000? Spoiler, unlikely. But with VW deals and ISO certs, let's unpack pros, cons, finances, risks, and pipeline to 2050. Smash like if autonomous tech's your drive. Innoviz, founded 2016 in Israel, they build LiDAR like Innoviz 2 for VW and BMW, 9.7 million Q2 revenue. Strengths, VW production ramp 2026 and NVIDIA integration for security. Weaknesses, 30 million Q2 losses and Nasdaq compliance scare, fixed in July. Versus Luminar's 150% margins, or Ouster's 100%, INVZ's 300% net is par for LiDAR startups. Now, the numbers. Margins deep red at 300% but plus under 30 pp toward break-even by 2027, 100 million profit. Debt 50 million, runway to 2026 with 100 million cash. Side income, software adds 10%, propping the balance sheet. Since 2021 SPAC at $10, down 81%, trailing S&P 500's 100% since 2020. Check this chart, insert table, Chalk's graph. Looking ahead by 2030, VW launches an ITS market, 73B, target 100 millimeters revenue. By 2040, quantum sensors, risks, NHTSA delays or supply snags, upsides, AI boom and CHIPS Act, no dividends, INVZ's pure growth, no aristocrat. Short term, 30-70% to 233, 327 on strong buy calls. Long term, 15-20% annual if autonomy delivers. Compared to Nasdaq's 150% or S&P's 100% since 2020, INVZ's 70% lags but matches Autotech's 50%. So, $1,000. No shot, even by 2050. But for self-driving bulls, INVZ's a speculative bet. Bullish or bearish? Drop a comment and subscribe for more tech breakdowns. Thanks for watching.